Hey, how are you doing? Consulted by G family. Once again, it's your boy G back at it with some more useful information for you guys. And today we're going to be covering how to enter and exit stock trades, because I know there's a lot of confusion when it comes to entering stock option trades and exiting stock option trades, especially with the type of callouts I do when I say this goes over a trigger to hop in this, and when they hit the price target to sell. I'm going to tell you exactly what I mean by these and how exactly you can make profit by buying and selling stock options. But before we can get into how to make profit, we must first understand how stock options really work. And I hope you watched the videos before this leading up to this video so you have an understanding of how stock options work. But for now, we're just going to cover how you can enter and exit trades efficiently so you can start making money. But before we get into this video, don't forget to follow me on Instagram @guapoboyg and Twitter @guapoboyg. All the links to my social media will be in the description below. But without further ado, let's get straight into the video so you guys can start making money today. Now, as you can see, I'm looking at the charts for AMD currently, and AMD is Advanced Micro Devices. Now, this is an electronics company, so they have a lot of fluctuating price ranges, especially with the way the market's going right now. And you know, it's kind of going sideways. As you can see, it's going up, but it's going down. And it's making higher highs while not making lower lows. So this is a bullish signal for right now, but that's not the point of this video. The point of this video is to explain to you guys how you should hop into trades. Now, for example, if I say you need to go into a put call, and I say the trigger for this put call is $87.09. As you can see, the support line for this is $87.09. When I say enter this trade, if it breaks the trigger at $87.09, I don't mean enter the trade as soon as we get to this price range of $87.09. I don't want you to do that, because if you do that, you will lose money. For example, let's say on May 10th that I put out an option call for puts on AMD, and the trigger for this put call was actually $87.09. As you can see, on May 10th, the lowest we actually got was $85. Now, this is still a good trade, but we're looking for bangers, and we don't want to hop in trades if they're having minuscule price movement, because we don't want to end up getting in our trades and have to sell immediately after we get in the trades for a loss of profit because the stock went down and bounced back up. This is where my stock market overviews come into play, because with the stock market overviews, you get an understanding of what SPY is looking like for the day, what the stock futures are looking like for the day, if the Feds are active for the day, which gives you a better understanding on if you need to have trades today, if you need to be trading for calls, you need to be trading for puts, and which overall direction the market is going to be going in. If you know the overall market is down right now, you should be looking at puts, while otherwise the market is up, you should be looking at calls. But at the same time, you do not decide this, the price action decides this. Because as you guys know, I usually have put and call options that are in my group chat, and usually they can go either way. And that's why I do not say which one you should call out and which one you should actually buy into, because there's no telling if the stock is going to go up or down, because the price action decides this. The stock market gets bounces all the time, and with a bounce coming in any time or a dip coming in any time, you don't want to be the person that buys into a stock option just because you feel like the market's going to go down today, or you feel like it's a good day for a put call, or you feel like it's a good day for an option call. That is a very fast way to lose a lot of money, and I want to avoid my members losing any money, because we want to make money in this group chat and not lose it. Now, looking back on May 10th, should you have entered this put option call? Yes, you could have, but you would have to exit for a quick profit, and that's not something I like to do. I like to go for big bangers such as this one. On May 12th, we actually went over the trigger of $87.09 all the way to the high of the next resistance line of $95.21. And this is the type of trade that I wanted to get in on, because we'll make a lot of more money actually using this trade than if we actually took the put trade, which you would have made a small amount of money, but you want to get the most bang for your buck. And another way to tell short term which way the stock may be going is actually through the RSI. Now, through the RSI, as you can see, when we actually broke through our resistance line, we actually got a very strong move up from 39.33 all the way to our oversold mark, of overbought mark of 73.98. We went to the 73.98 mark. As you can see, we hit the overbought mark, and we went right down to the downside, getting a bounce of our oversold mark of 30. And as you can see, the price action directly correlates with the RSI. That's why you have to take the RSI into account when we are doing stock option trades, because everything plays a very important part. And yes, I do have the MACD up right now because I was previously looking at crypto, but for stocks, you should have the volume open as well, because the volume is going to tell a very big part of the story when you are putting stock option trades and when you are actually doing calls or put. Because without volume in the market, you're going to see a move to the downside, which actually means you need to place puts. But if you do have a lot of volume in the market, this will actually bring the market to the upside, which means you have to have calls. And this is just basic information that you guys need to know to be more proficient in the stock market, to actually start making a lot more money on the stock market. And as I said, you don't want to go for the small plays, you want to go for the bigger plays, but small plays add up as well. Don't hold your money all day until 2-3 o'clock waiting to get into a big play when a small play happened very much earlier during the day. It's okay to get in on the small plays. It's okay to take your money as it comes to you. You don't have to force trades. You don't have to feel like you have to trade to get any money. Some days it's not the best day to trade. Some days you need to wait. Some days you need to take small plays. Some days you need to take big plays. This is based off your own discretion and based off the amount of money that you have to trade with currently. So what works for me may not work for you, and what works for you may not work for another person, but that's why you need to formulate your own strategy and understand what works for you. And the easiest way to get into stock option calls out is by trading through support and resistance lines, as you can see right now, as you can see through the calls I do. My triggers are usually support support or resistance lines, and this actually makes it easier for me to get bounce plays, as you can see, which will take me to the upside, or if we get breaking of resistance plays, which would easily take me to the upside as well, because a bounce play will take me to the upside because I'm bouncing off support all the way to the upside. But on the other end, if I'm actually breaking through resistance there, there's a strong possibility that I can break to the upside. As you can see with AMD, I can break from a price range of $84 all the way to a high of $104. And if we actually go and look up a percentage gain that this was, it would be very shocking to see that amount of money that you made just by holding the stock option, because you can hold stock options for days. You don't have to sell immediately after you buy. You can hold for months, weeks, days, depending on how long you like to hold the stock and depending on the value of the stock at the time and what it's trading at. But as you can see right now, this would actually be a 23% return, almost a 24% return, and that would actually be a lot of money in stock option terms, because with crypto that would be a lot of money, that would be a 20% gain, but with stock options you're putting more money up and there's more volatility in the market, so you're going to make more profit with your money, which is why I encourage trading stock options if you actually know what you're doing. Now for the final part of this video, I definitely want to mention that you guys don't have to wait until the price targets are hit to actually take profit. If the price targets aren't hit, you can still be in profit. You can actually still take profit. The main thing about trading stocks is you do not want to get greedy. Once you get greedy, you start losing more money because you'll actually be gambling instead of trading diligently. Trading diligently is sticking to your profit plan and your trading plan. For example, if you came into today with a goal of getting $100 and you obtained your $100, don't try to go chase $200. Take your $100 out, stop trading, and do something else to make some money, because the same way you made this $100, you can lose this $100 just as fast, if not even faster. So the main thing that you want to do when you're actually doing put calls or option calls, you have a price target that you're looking to hit. For example, let's say your price target is $99.29 and your trigger is $95.21. Let's say we went up and we went to the price of $96.32. We would actually want to take our money out right now, because there's no guarantee that we're actually going to go up to the price target, and there's no guarantee that even if we do hit the price target, it won't come right back down, because as you know with stock options, the moment that you sell, the price could already be going down, so you could be selling for a loss and not even know it. So that's why it's very essential that you take profits along the way up with stock options, and this is also why I say buy multiple contracts. If you don't buy multiple contracts, you miss out on the chance to make more money. But if you do buy multiple contracts, you actually need to be more diligent, because if you're not diligent with your trading, you can lose a lot more money, because you're supposed to be taking profits on the way up. If you're not taking profits on the way up or selling small contracts on the way up, and you try to take all your profit at the top, you'll most likely get burned and lose a lot more money than you've actually gained. So you definitely want to take profits along the way up, and on the way down you definitely want to cut fast. And also please have a stop loss set for your trades, because you don't want to be 50% down in your trade and thinking you can just hold and you're lose more money on the way you're holding. You actually want to have a stop loss just in case you go down below a certain number, whether it's 15%, 25%, 20%. 25% should be the most you're willing to lose on any trade, but even then it's too much sometimes. You should start off with at least a stop loss of 10 to 15%, and then as you get more acquainted with stock options, then you can level it up to around 20 to 25%, but you should definitely start off with 10 to 15% just to start off, so you can start making money within the market. But that's it for this video, guys. I'm going to probably make another video on this just to explain it more in detail and actually give you a little more pointers and a few extra tips. But that's the end of this video, guys. I hope you understand all the information I presented to you today, and I hope you're ready to make a lot of money. I'm going to catch you in the next one.